Thank you very much for joining us. We've got a great panel of speakers today. We've got two of our loan officers from Hudson United, Mike Vanmansart and Michael Coyne. So we do have two mics, so just to kind of help everyone keep it clear, when I talk about Mike, I'm going to be talking about Mike Vanmansart, and when I talk about Michael, it's going to be about Michael Coyne. You guys want to say hi and introduce yourselves?
Hello, everyone. I'm Mike Vanmansart. Obviously, thanks for the introduction, Adam. I am a loan officer in Orange County and also New Jersey. I've been with Hudson United, I want to say 5 or 6 years now. It's been a while, so I can't remember, but I want to say probably going on 6 years. And I know a lot of you. If I haven't met you, hello. And yeah, it should be a great panel.
Awesome. Michael?
Yes, Michael Coyne. Yes, hi, everyone. I know a lot of people out there. I've been around 26 years in the business. I've worked most of my career with a bank, HSBC, but for the last 5 or 6 years, I don't remember how many, I've been with Hudson United. And I tell you, I have to say one thing about the difference between work for a bank and a broker is that I love it as a broker. As a broker, we have so many options, and I don't have to turn away any deals most of the time. We can find a home for everything, and that's what's great about it. I live here.
And Michael, we've actually also got a guest on here. Would you like to introduce our guest, and then I'll kind of get us started?
Okay. Yeah, I wanted to introduce Stacy Quinones from GHV Real Estate Appraisers. She is one of the local appraisers in Rockland County. She covers Rockland, Orange, New Jersey, I think Westchester, and the 5 boroughs of Manhattan, Bronx, and all those. So Stacy, want to say a few words and tell us about you?
Yes, please. Thank you. I'd like to thank Michael for inviting me. Hello, Mike. Hello, Adam. And thank you, RAND team. I've been doing appraisals for 17 years now, and my background is also environmental. So, and I live in Rockland too. So yes, I cover Rockland. However, the company's footprint is, like Michael had said, 5 boroughs, Westchester, Putnam, Dutchess, Summer Jersey, and sometimes Sullivan. So yeah, we are a local company in all areas.
Are you guys you guys have still been busy, right? You guys have still been working. You're not, we're still seeing, mortgages come in, so we still need appraisals, right?
We all thought, I think, that it was going to slow down a little, but it was the complete opposite. We just had to adapt. The business is still going forward. The purchase transactions are still coming together. A lot of refinancing right now, just with the market being what it is. But yeah, I do think that we thought things would slow down, but they didn't, and we just had to adapt. The guidance that came out from Fannie Mae and Freddie about how we can take care of appraisals in this market basically helped us to allow us to do some drive-bys or external appraisals only, which really helped keep the momentum going through this time. So it's definitely been a benefit for us and also for the clients to not have to let people in their house when there's always this fear of someone getting sick.
All right. So right now, what you're telling me is that the transactions that are going on, we're not having any issues on the appraisal front with regards to having our loans processed. Things are still kind of moving along. Has the timing changed with regards to getting them ordered, getting them set up, getting them delivered?
It depends, I guess, on the market, like what area, if it's Rockland or Orange County. I do think a lot of appraisers took the cautious approach and maybe took their name off of some list temporarily. So it created, only a few appraisal partners that they could utilize. And obviously those appraisers probably got a little bit more busy. So yeah, I don't want to say that it's, taking weeks and weeks, but it did slow things down a little bit, but it kind of slowed things down across the board, not just with appraisals. Underwriting slowed down, turn times have slowed because everyone essentially is working from home. So we're not waiting on appraisals. Like I'm not waiting. The last thing I need is the appraisal to get done. It's coming in a timely fashion and they're closing on time.
Michael, what are you seeing similar? Are you seeing any trends with regards to the timing of processing transactions based on appraisals?
No, I mean, basically, it's the one thing that's been taking a long time to get the appraisals ordered is waiting for contracts a lot of times. Appraisals, we have to have a fully signed contract before we can order the appraisal. And that's an important factor is that, I get calls from realtors saying, why hasn't the appraisal been ordered yet? Because we haven't gotten the fully signed contract back. And it all has to do with a lot of attorneys that are working from home. The sellers and buyers aren't actually coming into the attorney's office to sign. So sometimes you're selling them by mail. I mean, a lot of the real estate attorneys have not gone on to like a DocuSign type system where they could just send the contract over that way and have them e-sign. I'm not sure if that's an issue with just because of the legalities of it, but we have to wait for the contract. So when we get the contract, I just got one, for instance, this morning. And the listing agent goes, "Can you order the appraisal?" I said, "We'll get it ordered right away." So I sent it to my office, to Alex, who's our person that handles ordering appraisals, and he ordered the appraisal within an hour. So that appraisal call will go out to the realtor, either the listing agent or the seller's agent, and they'll get that appraisal done, at least scheduled within the next couple of days. And it's about a turn time of 72 hours on most appraisals. And Stacy can attest to that normally that's they usually have a time period that they have to return appraisal after they do the appointment, and normally that's like 72 hours. And I have seen that most of the appraisals have been coming in at purchase price or within a few $1,000s. Not many have been coming in low. I think we might start having more issues with that now that the bidding wars have started. The realtors on here can attest to the fact that many of the deals are going for more than list price, and that will cause the issues that the appraisers had back in before 2007, where they were giving a lot more leeway with just doing what they call a market value adjustment, which is not allowed anymore. But I know that appraisers can use, as Stacy also can talk to, is they can use a listing that is now in contract if she can find out what the contract price is. And that's the one thing that the appraisers really could use to know, to be able to make sure that they hit the price on the contract.
Mike, I want to ask you a quick question. It came up in the chat, and I think it's really important. You mentioned that most of the time after you get the contract, you're pretty good in 72 hours. We're aware that several years ago, the finance regulations came out there, which kind of rolled through how appraisers get assigned when the banks are making the requests for the appraisals to occur. If it's starting to take more than 72 hours, what should agents do? And have you guys seen that it's trending more due to the fact of understaffing? Is it due to the fact that the appraisers aren't going out? Like, what's a good course of action that an agent could help take to make sure that they get started? Because I've got a whole bunch of questions about the process itself, and I'm actually lining them up to ask Stacy once we get out into the world. But right. I need to get to Stacy first. So right. I get my contract, it's fully executed. I send it to you, and you go and you order the appraisal, and it's now next Wednesday. Like, what's my course of action? What should I be doing? What should I be expecting?
All right, well, first off, because of the mortgage meltdown, all appraisal orders have to go through what they call an AMC. That's an appraisal management company. And on those companies, they have a list of appraisers that supposedly go in a rotation on how they order them. So if that appraiser that they first pick says, I'm not doing appraisal right now, and he's still on the list, they never took their name off, they have to move on to trying to find the next appraiser on the list. And maybe the appraisers are a individual where they don't have a staff and all that, so they don't get back right away. So these things will delay the appraisal orders. It takes time for them to respond to the AMC and say, we accept the order, we'll do it. And then basically we'll say if they are willing to go in the house or not. Appraisers can also be the ones that say that they don't want to go into a house. Again, it has to do with this COVID-19 thing where appraisers, if the house is, they don't, maybe they wouldn't know, but if it's a nurse or someone that works in a hospital or is in someone that works in the first responders position, they may be a little resistant to want to go in that property. So appraisers can also be the one that says no to going in a house. So I guess the AMC will make a decision if they want to move on to another appraiser or allow the appraiser to do what they call a desktop or a drive-by appraisal. So those things can delay the response for getting the appraisal actually ordered. And most of the time haven't had much trouble with that. Like I said, I'll see when the appraisal is ordered within a day or so. Sometimes in the same day, we'll get back a response. Like Caliber is one of our lenders, and we get an email update every time the next position has been hit on my email. So I knows when they ordered it, when they paid for it, when they've contacted an appraiser, when they actually have now gotten a response back saying they'll accept the order, and then next that an appraiser has been assigned, and then the last one is that a date has been set for the appraiser. So we'll get notifications. And I try to keep the realtors that I work with up to date on the order has been placed. The order is now, the appraiser has the order, and he should be contacting you shortly. So, and I told him, look, make sure you get back to me if you don't get a call, because I want to make sure that this appraisal gets moved along.
All right, so now we've gone and we've placed the appraisal, and now it goes through the AMC, as you mentioned, and someone, like Stacy, if you're fortunate enough to have someone like Stacy to do your appraisal, you're in really good hands. I happen to know Stacy for about 15 years plus in the industry. So now, Stacy, you get the appraisal, right? And I want to talk to you a little bit about kind of what happens now. So what happens? You get from bank X, that says, hey, listen, I want a new appraisal. What's the process that you go through?
Hi. Okay, so the appraisal comes in our email. I do have an on-site staffer that looks at the emails, accepts it or declines it, or accepts it with conditions, meaning we do research on it. We look at MLS, see if it's any complications, if it's high end, if it's listed now that's on a refi, I'm sorry. If it's high end, if it's a 2-family, if you're ordering it as a single family. So in the office, all that research is done. And then we either accept it, decline it for whatever reason, or we accept it with conditions. So once we accept it, it's already assigned to an appraiser. Now, if that appraiser happens to be unavailable, out of town, someone else will pick up that assignment. The girl in the office will call up the bank or email them and say, hey, Stacy's not available. Can you assign it to John? John Thompson, who's also one of your agents, does also appraisals for us. So John Thompson then gets the order, or whoever it might be, and then usually we're out on the field, so there is a delay, but we are proactive. The girl in the office usually looks it up and says, hey, I'm missing a contract. So they'll email the management company and say, I'm waiting for a contract. She'll look at the listing and see who we should contact. She might make contact and say, heads up, we got the order, somebody will be contacting you. In other words, all our in-house is customer service and communication, which is huge, because we want to let Mike or Michael know what's going on, or the realtor what's going on. So we have to update. So we are very customer service oriented. It's like everything else. My attitude is you get an email, respond back. Everybody needs to know what's going on out there. So then after we get the order, it gets assigned, then we schedule, we call up and make an appointment to go out there. And yes, you have that Michael mentioned, that the homeowner doesn't want us in the house because has kids. And then we have to let the bank know. So the lender will tell, the management company will go to the lender, and then they'll say, okay, we'll do a desktop or a drive-by or whatever the case is. And what we rely on when we have to do a desktop, where we don't even go out, but again, most of my appraisers, myself included, do like going out there and at least taking a picture of the front of the house and the street. Then we rely on the realtors and the MLS photos, which is huge.
All right. Well, hold on. Let me roll back for a second here, because there was like 10 different things on there, and I want to kind of like just focus in.
Okay.
So just to kind of get back on track. So you guys get the information from the bank, you go and schedule the appointment. You go and schedule the appointment with the realtor. You kind of go and go get the appointment set up. Let's go with kind of the, right now you mentioned there's two different types of appraisals that you guys are going for. One of them is where traditionally where they would, the seller would allow you into the home. We're going to come back to that one. And the other is something that you called a drive-by appraisal or a desktop appraisal. So just what is a drive-by or a desktop appraisal? And are the banks, and then Mike, do the banks, when they get that back, are they looking at that differently than a traditional in-house appraisal? So Stacy, what's the difference between the two first?
Well, a drive-by / exterior is you drive by the property. Take a photo of the front, the street, both sides. It's a drive-by. A desktop is a desktop. You don't have to leave your chair. However, most appraisers, I myself, like I said, like to go out there and just take a photo of the front of the house. And we rely on the MLS photos if it's listed through MLS.
So when you're doing either a drive-by or a desktop, do you find, and again, would you find that your comps are better off, worse off? I mean, how, like, are you seeing a difference because you're not seeing the intricacies of a house, or is it sometimes benefiting a house because some of the intricacies are being hidden by not going in there?
The comps are what they are on MLS. So, and the subject, because you're always comparing it to the subject, it might benefit the subject that we're not going into the property. We're just looking at creative photography, but the comps are the comps on MLS. So they are what they are. That doesn't change anything because we rely on the comps. Even if we go inside a house, what the interior is on the comparables, it is what it is. It's basically your subject property. Not going in there and looking at the MLS photos. That's what we compare it to with the comparables. But the comparables are the comparables, either way you go about it.
All right. And then, Mike, let me ask, I mean, when you're processing a loan and you're dealing with the bank, are you hearing any difference between whether it was a traditional traditional appraisal or if it was a desktop or a drive-by?
No, there's no real difference from the bank size. Every appraisal goes through, it's basically a third-party audit that says, hey, if this value is in line, because remember, the banks have the data too. We rely on the appraisers to basically solidify that data and make sure that the value is there. But all appraisals go through some type of, it's like a third party, it's called an SSR search, which basically gives it a grade. And if that grade is not up to snuff, they'll kick it back and rely on the appraiser to comment again on why maybe they didn't use this particular comp or what's up with this property. But in terms of, is it looked at differently? No, there's no real scrutiny versus a desktop or a drive-by. All
right. Stacy, you then mentioned my favorite word, and this is one of those things that I've heard some people tell me it's an absolute. I've had other people tell me not at all. You use the magic word of a comp, all right? A comparable, something that is going to help justify the valuation. Now, as a buyer's agent, if I'm meeting you out there, or the seller's agent, trying to sit there, should I bring comps? Should I not bring comps? It's like a bottle of wine to dinner. Like, am I supposed to bring something? Am I not supposed to bring something? What do I do with comps?
Bring your comps. Bring your comps. Write notes on your comps because a lot of the realtors have been inside the comparable house. They know it. I mean, it's a photo depends on how would you say it, magic photography type of thing, creative photography, but the realtor's been in the house. So with the comps, write your notes on it. Now if a comp is under contract and the realtor feels confident with the appraiser, that comp that's under contract is going to help the subject go at the sales price or go over that little hurdle that the appraiser is experiencing, especially with the COVID. The past few months, not much has been moving, but the past month and a half, you see a lot of movement on the under contracts more so, and the bidding wars coming up the past few weeks. So bring your comps, write your notes. You might be the realtor that has that comp under contract. Let me know. It doesn't go anywhere else.
All right, so that's really important. And when you're looking at comps, I mean, so pretty much you're telling me that the under contracts are relatively important, especially with what's going on in today's environment.
Yes, especially with the bidding wars now, that under contract price is going to make the deal.
Now, here's the interesting thing though. Like as an agent, I may know that, hey, listen, like the house up the street is under contract, and yep, I went in it, and it's a wonderful it's a wonderful property, but I don't know what that price is. But it's another agent. So what role does the appraiser have in trying to identify what that pricing is?
I call up the other agent and get proactive and ask. Most of the agents know me and know it is confidential because there is a fine line there, and I totally understand. But once I get that under contract price and they feel comfortable giving it to the appraiser, speaking for myself, a lot of the agents do, I put it on my report, because especially now with the bidding wars, I need to show the bank a snapshot of, okay, I have 3 title transfers and this is what was going on. This under contract is going above due to multiple offers and due to the market right now and the lack of inventory. So that under contract price is so important right now that that's going to make the deal.
All right, well, it's good to know that by keeping active. So it really does become kind of a communal piece where everyone's kind of helping everyone move along. So we have somebody who is okay with you coming into a property. So it's 2 different questions that I have. Let me start with the easy one is, what precautions are you taking as an appraiser when you're going on site, and what other things are you asking of the sellers who are on the site when you go to actually do an in-house appraisal?
Well, I don't speak with the seller. I usually talk to the realtor, but I myself, I will tell the realtor I will be going in, and my appraisers go in with mask and gloves. And then the realtor sometimes will say, well, my homeowner won't be home, or if she is home, she will also have a mask on at the bare minimum. So we kind of keep protection. All
right. Well, it's good to know that that everyone is following the PPE standards and requests. So this is kind of an interesting question. I mean, who should actually be at an appraisal? And I know that we've got kind of 2 different worlds on this, right? So we've got our current world right now, where we are dealing with everything with COVID-19, and then hopefully the world that we return to. So when this appraisal gets scheduled, who do you expect to see there?
I expect to see whoever wants to come. I make the appointment with the contact person on the order that I get. And then whoever wants to come could be there. It doesn't really affect me. I'm doing my job. Or sometimes nobody can make it. I do have MLS access and e-key or whatever. And a lot of the realtors, knowing me, and especially if it's vacant, they're like, sure, go ahead in yourself, or they make the appointment with the seller. But I don't mind who comes in, as long as they're wearing the gear too. Don't forget, we all have to protect ourselves. So I have no problem who shows up.
All right. I want to just roll back because there was a question that popped up in the chat, talking about comps. How do you take into account for sale by owners that are out there? I mean, do they have any value in your comps, whether they're considered active, even though they're not active in our MLS?
For sale by owner, the only thing I might maybe rely on if there's some kind of contract involved. I'm not going to go by what they're asking for, but if the realtor knows that the house next door is for sale by owner or it's sold by owner, and we have documentation, I have no problem, putting that as an additional comp. I wouldn't put it as my first 3 comps, which is required by the lender, but I would put it in if it makes sense as a 4th comp if need to. I have no problem.
You said 4th comp. So right now, how many comps do I need?
Lenders require, most lenders, Michael and Mike could attest to that, 3 title transfers or 4, and either active or under contract. I prefer to put in 4 title transfers, that makes sense, and I like under contracts. Actives are good, but under contract gives it more power, and it's more, it just helps more. The whole appraisal helps more under contract, especially if I have the under contract price.
All right. So now the report's done. It takes X amount of time. I'm not going to tie anyone in on, I know it's not instantaneously. I mean, I know there's time to take the report, but you then get the report and then you send the report to the bank, or does the report go to Michael? Who does the report go to after you're done with it?
After the appraiser is done with it, we have an internal reviewer. We do not rush out our reports because the goal is once that appraisal leaves our office, I don't want to see it again. And Mike and Michael could attest to that because once you get that report back, you don't want the bank tearing it apart. So my goal is it gets reviewed and then it gets sent to the management company or the third party or directly to the bank. And then they review it. But it goes through my review department, in my office, in-house, every one of my appraisals.
All right, so then Mike, let me direct this over to you then, right? So now Stacy's done her job. She's completed the appraisal. It's been sent back to the management company. The management company is then going to send it down to you, and we find out the appraisal is low. We find out that we were looking for a 350, and it came in at 325. We're 25,000. What's next? Like, how do we move forward with something like this?
So, I mean, it really depends on the buyer and the seller. A lot of times there's a renegotiation that may take place, whether they meet in the middle, the buyer brings the additional funds to the closing, or the seller perhaps reduces their price. It's really just talking it out. There's obviously the bank's not going to lend on a house, more than it's worth. So we have to make some changes in our system to either lower the down payment or just, change the loan itself to get it to at least close. And then we rely on the buyers and sellers to figure out ultimately where they want to meet on the price. And if the seller is not willing to negotiate and won't accept a lower price based on the appraisal, then the buyer has the option to bring the funds, or in essence, we would have to decline the loan because the asset is not worth what we're lending. So actually, it leaves me for a question for Stacy that I've always wondered. Whether it's a refi or a purchase, there's always, in the instance where it may come in a little low, and do those recertifications value, or where we basically want to provide you additional information to see if maybe, hey, you might have missed something, right? How do appraisers interpret that? And what do you guys like to see? Because we're the ones that actually put it together. I rely on the realtors to provide me additional comparables that they feel support the value. And then obviously I can't speak to you, Stacy, so I have to plug it into the AMC, give them the list of the houses that they feel support the value or are more comparable or closer than the report that you provided. What is your interpretation of that? And I didn't mean to steal the question from you, Adam, but it's always a question I've had, and I know realtors have it. So
good question, Mike.
Okay, so this is what happens. I just got hit with one. It was a refi. Refis, we don't, you look around, you try to support your value. On the refi, you don't, you go out there, you just see the house. So what happened was I saw this house, I did an exterior. So the homeowner took photos, sent them to me. All of a sudden I get an email from the management company telling me, would you reconsider the value? We have this one comp. I'm like, yeah, why not? So I looked at it and it was a 1-year-old house compared to a 65-year-old house. I was like, oh God. Anyway, once it adjusted, it was kind of like, so I reached out to the homeowner and I said, listen, do you have anyone in the, any realtors or whatever? Why don't you talk to them and tell them what you're up against and see if they could pull up comps. Now, I've already looked through the MLS system. long and behold, there was something, again, sell by owner and a contract. So they sent it to me, and we were able to, I was able to bring up the value and justify my value. On the other side, when you have a purchase, you have the purchase price. Once I see that I'm hitting a wall, I call the realtor. I call both ends, and you'd be amazed how many realtors don't return my phone call, or I'm too busy now. So I'm like, listen, I need your help. I am like really desperate here. Help me. Or I called a comparable realtor on something and saying, you know, painting a house and putting granite countertop on old cabinets doesn't mean it's been updated. Help, you know. So I am pulling teeth. It is constant, trying to do my best. Again, once that appraisal leaves my office, I don't want to see it. And then on the flip side, they, you know, the realtor, I'll tell the realtor, you know, help me out here, or it didn't come in, you know, the value didn't hit, and we've tried our best. Then they have the right to go to, and I get calls from realtors all the time, can you help me out because this didn't hit value? They are allowed to send to the management company who goes to the lender, to you guys, I have these comps. Why didn't the appraiser use them? It might have been an oversight, or one might have closed. So it's, again, very important, the communication, and we have no egos here. I just upped the reconciliation of value by $10,000, and like I said, we justify it. We just had another one, we had to up it by $25,000, as long as you could prove your case, because our license is on the line. So we do reconsider values.
Adam, I have just one quick question that I could direct to Stacy.
Sure.
Well, could you explain, because I have a lot of realtors that, you know, when we have a problem with an appraisal and I ask them to send me a comp, and they send me one that did close 2 days after you did the appraisal. Can you explain why we can't use those? Because that's the one thing I always get, you know, kickback on. Why can't they use that? It just closed. It's a perfect comp for this house.
We're going by the effective date. The effective date was 2 days ever. However, you can use it. You can put it in there and tell the bank, this was listed, especially if it went above sales price. That's like gold. Like this comp was listed for $500,000. It was on the market for 15 days. It closed 2 days ago after my effective date for like $550. It's a good comp. You know, again, depending on the letter. I've done it. We've all done it. All meaning us appraised. I've done it myself and my appraisers. Where again, that's why when we call the realtor, the under contract price is so important, because we wouldn't have to reopen the report and explain ourselves and go through this whole rigmarole with the AMC, with the lender. So it should, you know, the banks I deal with, or the lenders, I haven't had a problem putting that as a comp and hanging my hat on it.
All right, so it's not, you know, against Adam, I'm sorry. It's not that there's a rule they say you can't use it, because some appraisers will not accept it. I don't know what their reason is, but they tell us because it closed 2 days after, they can't use it.
You use it, but you don't put the closing date because it's 2 days after. You put that comp as under contract. Okay. Now, the realtor tells you the under contract price. So you put a whole comment that, again, it was active, blah, 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 and it went over bidding price. It's how you present it. Appraisals is not a science, it's an art. It's how you word it, how you put it together. So if it did close, which has happened, I'll do a job today and then something closes on Monday and I'm like, oh, it closed. I'll put a comment in there. Or again, the realtor gives me the under contract price. But you can't use it as your third comp with the lenders. That you can't do. But you can use it as an under contract, or, you know, yeah, you can use it and put a whole comment in it. Comment in the whole thing. You can use it. I do it.
A question came up while we were talking about comps, and it's an interesting one. I always was under the impression that comps were done by distance. You know, we take the subject property and you pretty much spiral out, you know, until you can kind of hit enough comps. The question that came up is, do you have to, or are there guidelines about comping comparable roads? So if we have a high rise in a development versus a high rise on a double yellow line road, if they're the exact same house, but the location is within, we'll call it within a mile, but one's on a double yellow and one's not, how does that change the comp process?
The comps, there is no set rule on distance, on time. I'm doing a job now. I'm going back to 2018 for comparables.
Wow.
I know the bank's not going to like it, but it is what it is. It's how you explain it. Again, it's a story you're giving the lender. The double yellow line road, if I have a comp on, I just did one, on Pierce Parkway, I'm going to adjust for it more than if it's located on double yellow line road in Pearl River. So you adjust for location on the comparable. Distance, you can go more than the mile. There is no rule, you have to stay within the mile. You have to stay within the 6 months. You have to, there is no rule. It's how you put your report together that makes sense when the underwriter reads it. And that's what it all is, how you're gonna put your story or it's an art, how you're gonna put it together and present it.
All right, Mike, I got a couple other questions that came up, you know, to me, and then if anyone else has other questions, please throw them in the chat room. I'll try to get them out there. You know, I've heard a few times while we've been talking about something called an appraisal waiver. What is an appraisal waiver?
It's just like it sounds. We have enough data on the property that we don't need to send an appraiser out there. So we can play with the value in our system. In certain cases, I'll increase it to see what the waiver will be granted at, and I can, you know, decrease it to see, or increase it even more and see if it's granted at that, or lower it to make sure that we get it. But in essence, it's just like it sounds. There's no reason to have an appraisal done, but the reason that they're being granted is usually one of two things. It's usually 20% or more down on the property, or in a refinance, a loan to value of 80% or less. And the reason we're granted them is likely that loan is owned by either Fannie Mae or Freddie Mac, who purchases 90% of the loans in the US on the secondary market. So what happens is we run a search in our system, and it basically will ping if it's a waiver is granted. And we run it both through Fannie and Freddie. And if for some reason it's granted from Freddie, for instance, it means that the likelihood that that home was at some point owned by Freddie Mac on the back end is usually why we get them. So that's really it. It does save the client money. We always will give the person the option. If someone is putting 20% down and they really want to know the value of their house, I'm never going to tell someone that they don't need to get an appraisal. Everyone wants to know if they're buying a house, if it's worth the money that they're paying. So we'll present the option, and I'll just say, hey, it's, you know, this amount of money to get an appraisal done, or we don't require one for lending purposes. You're welcome to, you know, not incur that cost.
All right, Michael, you know, Mike had just mentioned Fannie and Freddie. Does it depend the type of loan that I'm getting? If I'm getting an FHA, a VA, you know, does that change how you guys order appraisals and what process we have?
Well, yes. I mean, there's a difference. Freddie and Fannie are pretty much the same type of appraisal order. The 2055, there's certain forms that they have to put on for those orders, and then there's a different one for FHA and VA. And for instance, on an Fannie Mae or Freddie Mac, for instance, this condition can accept deformities with the house, very minor type things, but, you know, little cracks in some windows, or, you know, cabinet doors missing, or, you know, the floors not being, you know, being very worn. Maybe the cabinets have missing knobs, or some of the electrical outlets don't have face coverings on them. Those kind of things can be, you know, overlooked or adjusted for, as Stacey can confirm, on a Fannie and Freddie Mac type appraisal. But on FHA and VA, those things are all issues. Missing railings, a sidewalk coming into the house that's all broken up and cracked. It's more about liability issues. They you know, the government loans fear, I guess, you know, lawsuits against the house, because a deck has railings that the posts are too far apart. It's starting to rot, and they'll require those things to be repaired. Peeling paint on a house. I guess the advantage of right now for FHA and VA is, like Stacy says, if there's creative photos of the interior of the house, and they can't do an interior inspection on an FHA and VA, we might get away with not fixing certain things because of the appraiser can go and only take a picture of the outside of the house, and hopefully no peeling paint or no railings missing on a small staircase. We can get by with just the interior pictures of the listing agent, or anyone that took the pictures didn't take pictures of holes in the wall.
Got it.
The appraiser has to make their assumption on that type. But if they do an interior, it's going to be repairs required.
All right. One other thing that kind of just was flagged in other terms that I've heard is appraisal subject to. I've gotten an appraisal back, but it was subject to it was subject to something.
Right.
Like, I don't understand, like that I don't get, but what does that actually mean in the industry?
Most of the time, subject to is, there's going to be some repairs that have to be done. The appraisers basically, most of the time, I'm not sure Stacy will know this more than me, but they don't really look up like violations on a house and things like that. But if there's an issue that on even a Fannie or Freddie that they see is a open panel on a electrical box that shouldn't be open like that, or there's wires hanging from the ceiling, even in an attic that could be dangerous, the appraiser might take pictures of that and say, those need to be tied up, and they'll make it subject to those type of repairs because they like small, not violations, but they are subject to a liability, or they are issues that could be hazardous. And on FHA and VA, subject to means that there's definitely things that have to be repaired and have to be fixed prior to closing, or the house needs a rehab loan, or maybe we can even, appraisers will do like a value for repair. They'll say like cost to correct is $1,000. Get by with sometimes with just holding back $1,000 at closing to do the repairs.
All right. So I want to, like I said, if you got any other questions, please put them in chat. I want to ask what I think is probably going to be the most important closing question for everyone who's kind of hung around with us. Stacy, as a seller, what is something that I can do in my house that when you're looking at it is going to help? Like, what's something that catches your eye that makes that appraisal more valuable? Or is it really just cold numbers? Like, if my bathroom looks really pretty and has, clear clutter and everything's wiped down and looks great, or all my kids' toothbrushes are on it. Like, what can I do to help? And I'm going to use the word stage, but what can I do to help present the best picture to get a higher appraisal? Or what are the type of repairs that would differentiate in the comps when you're looking at them? Like, does that fresh coat of paint really help in the comps, or is it just that's $400 in paint?
Well, condition matters in a way that, as an appraiser, when we go into a house, the condition meaning, first of all, FHA is health and safety issues. If I were doing an FHA, I would look for, like Michael said, it's safety issues, banisters, broken tiles, holes in the walls, the whole thing. Also, lead-based paint is very important. The peeling paint on the outside is very important. The inside, if it's well kept and they have a Formica countertop, and it's well kept, that's fine. I'm not the realtor there. I don't care about the paint and all that. Appraisers are very black and white and boring. How can I say it? However, if it has granite countertop, it's in the condition. Comparing it to a comp, my subject has the granite, the comp has the Formica. I'm going to give the comp, the inferior is with the comp. My superior is my subject. So we look at things, basically the upgrades. It's very important with the seller, point out the upgrades too. What have you done in your home? Show me, like, even the minor things. A lot of sellers won't pull back the shower curtain to show me all the new tile work they did and the upgraded. I'm walking into a bathroom, I'm taking a photo. Sometimes FHA, I'll pull back the shower curtain because you have to paint the picture for FHA. On a conventional, I might just take the bathroom. It's very important the seller to show us exactly what they've done in upgrades on their property. But other than that, about if the Formica's well kept on the countertop, that's fine. If the bathrooms haven't been updated, everything's well kept, that's fine. But I do compare it with other properties, and if they have the granite, I do adjust for it. So I don't know if that answers your question.
No, it really does. And I mean, I think that the summarization of the whole thing is to understand, and you used the expression earlier, which is that the appraisal tells the story. The appraisal really is going out there and they're looking at the comps of things that have sold and things that are under contract, hopefully that will sell, with the goal of telling a story as to why one of the lenders is going to provide a large sum of money to our client to go and purchase a home. So it is really important that we do it, and it's good to know that yes, it's not necessarily that you need to go and put away the toothbrushes, but you're right. If you've got brand new tile, don't hide it behind the shower curtain because the appraiser's running in and out to take the photos and go from there. What I'd like to do, I don't know if Dan is on the call, if Dan wants to say anything. But while I just check on that one, I definitely want to thank our panel today, Mike Vanmansart, Michael Coyne, and Stacy Kolianos from GHV Appraisers. I think this has been very informative and interesting. And it's good to know that with everything going on that, we know that the financial institutions did not really get halted by COVID-19. And it's good to see that things are really kind of processing. And what I personally have taken away from this is that we have to be communal. We need to help each other out. We need to be open to sharing under contract data, and it's really going to help accelerate our transactions as we get back into the market. So with that, I thought I saw Danny, but I guess not. With that, what I want to say, I'm just looking to nope. Danny said he's very happy. He actually had a run off. So guys, with that, listen, I appreciate your time today. And thank you again for sharing your insight. And that's pretty much it. Guys, listen, everyone else, thank you very much for joining the call. And we will see you guys next week. Make sure you tune in for next week's panel. And until then, have a great weekend. Mike,
Thanks,
Michael,
everyone.
Stacy, guys.
All right, thanks, Adam. Thanks, everyone, for listening. And Stacy for being there. She did most of the talking.
Stay safe.